Thank you, Mr. Chairman. Thank you, Mr. Speaker. I rise today in support of House Resolution 844, which provides for the consideration of H.R. 2357, the Accelerating Access to Capital Act, and H.R. 5424, the Investment Advisor Modernization Act. I know how hard my colleagues on the Financial Services Committee worked in crafting this legislation that will strengthen our economy. Also, I'm grateful for the hard work to make sure that this is a bipartisan effort. I was proud to support this legislation in the committee, and I'm hopeful it will see a strong vote of approval when voted here on the House floor. I'm proud to join Representatives Vargas, Stivers, Foster, and Sinema as a co-sponsor of Mr. Hurt's legislation, H.R. 5424, the Investment Advisers Modernization Act. The modest changes that this legislation would make makes it easier to invest in job creators, our families, and our communities. Dan Gallagher, a recent commissioner of the Securities and Exchange Commission, agrees and has testified in the Financial Services Committee. The bill, and I quote, he said, preserves the registration regime for private fund advisors while at the same time removing or modernizing in a rather modest way some of the most unnecessary, outdated, and overly burdensome requirements of the now 76-year-old Advisers Act that drives costs up for funds and investors and hinders the efficient allocation of capital to help grow businesses and create jobs, end quote. These changes will make it easier to invest in our communities, and these administrative savings then can be passed on to investors. The Accelerating Access to Capital Act, led by my colleague on the Financial Services Committee, Ms. Wagner, would make it easier for small businesses and entrepreneurs to access the capital they need to grow their companies and create jobs. It's important that we have smart regulations in place that provide certainty to investors and to our markets. It's equally important that the Securities and Exchange Commission not unnecessarily inhibit capital formation. In fact, the agency has a mission that states these two things should be treated with equal importance. This important package of legislation includes relatively modest but meaningful changes to our securities laws that will improve access to capital for smaller businesses and entrepreneurs without jeopardizing consumer protection. Title I of this package, authorized by Ms. Wagner, makes it easier for more small companies to use a less burdensome document when registering with the SEC. Over the last 5 years, the number of smaller companies, those with less than 500 employees, has declined. This is the first time that this has happened since the U.S. Census Bureau began keeping data on the subject. In 2012, the SEC's Government Business Forum on Small Business Capital Formation report included a recommendation to modernize and expand the utility of Form S-3 for a great number of public companies. This is just what Ms. Wagner's legislation proposes to do. Furthermore, the report noted that investor protection concerns have been substantially eliminated with the advanced information technology, including EDGAR, which is the SEC's electronic disclosure filing system. The Accelerating Access to Capital Act includes two other very important titles. My colleague from Minnesota, Mr. Emmer, has put forth legislation that would exempt certain micro offerings from the registration requirement of the Securities Act of 1933. This important change in law would allow a startup business, the engines driving growth in our economy, to solicit friends and family to invest in their businesses. Investors with a pre-existing relationship with those most committed to the company's success likely have the greatest understanding of its growth trajectory and prospects for generating a healthy return on investment. This will allow small business to access capital without having to navigate more complicated federal securities registration or win approval of the SEC. Mr. Emmer's legislation will help fuel growth on Main Street and help create the jobs our constituents deserve. Mr. Garrett, the chairman of our Capital Markets Subcommittee and a strong leader on these issues, has put forth legislation to ensure the SEC returns more of its focus to supporting capital formation, just as Congress intended in the Jobs Act. Mr. Garrett's legislation would direct the SEC to revise Regulation D so fewer small businesses are required to register their securities with the agency. It would help eliminate some of the most excessive regulation we hear about far too often from our constituents. The legislation will allow entrepreneurs and small businesses to go back to doing what they do best, innovating and creating jobs, ensuring families in our communities have a paycheck to put food on the table, can cover the increased cost of health care, and provide opportunities to help their children be successful in the world. Again, I'd like to thank Chairman Henserling and my colleagues on the Financial Services Committee for all of this hard work and encourage all of my colleagues to support the rule and the legislation to follow. With that, I yield back. Thank you.